All right, so we got a lot of news to get into from this past week. First things first, if you get value out of this video, please like, comment, subscribe, and let's get right into it here. So the big news from this week came out on Friday morning. It was the Jackson Hole meeting this weekend. Fed Chair Powell indicates interest rate cuts ahead. So let's see exactly what he said here. He said, quote, "The time has come for policy to adjust," unquote. Central bank leader said in his much-awaited keynote address at the Fed's annual retreat in Jackson Hole, quote, "The direction of travel is clear and the timing of pace of rate cuts will depend on the incoming data, the evolving outlook, and the balance of risk." So he says quite clearly here, which is kind of rare for the Fed to say, they will be cutting rates. It's just a matter of how much and when. But I mean, I think I think we're talking like 98 to 99%. We get at least a 25 basis point cut in September, and I think it's more likely than not as well that we get a 50 basis point cut, and then on top of that, probably another 25 to 50 basis points in either November or December. And the market responded to that quite nicely. The S&P was up about 1.5%. The NASDAQ was up about 1.5%. Ironically enough, though, I don't know if you consider it ironically, but small caps had the best week. They were up like 3%. Mid caps were up about a little over 2%. And then the equal weight S&P also hit an all-time high. And I think that that's important because that's exactly what I've been saying over the last month or so, that I think that mid caps, small caps will outperform over the rest of the year. And that has happened over the last, for sure the last week, but I believe over the last month or so as well. But you also have to keep in mind that, I mean, your NVIDIAs of the world were also up a lot. NVIDIA does release earnings next week, so I think that could drive the markets a little bit as well. It was up, I think NVIDIA was up quite nicely. No, 3.5%. I mean, for NVIDIA, that's not a lot, but for a $3 trillion company, that's quite a bit. For the market, that's quite a bit. So the surprising thing, or maybe not, it's not that surprising when I think about it, but the growthier names have also rebounded quite a bit. And I personally am going to change my outlook on the markets for the rest of the year a little bit. Not that much, but a little bit. And what I think is going to happen is over the next 2 or 3 weeks, 4 weeks, prior to the interest rate announcement in September, I think we probably go higher. And the S&P is very, very close. I think it's less than 1% away from an all-time high. We closed at a little bit over 5,600, and the all-time high is like 5,660 something. So it's very, very close from an all-time high. The NASDAQ's a little bit further away, but it's still pretty close. So I think the preponderance of evidence, the likely scenario, is we do hit a new all-time high in the next week or two, and then post rate cuts, I think we probably get a little bit of a sell the news event. I think it will depend on a lot of things. There is obviously there's negative data that could come out between now and then that could make that not happen. We still have the election, which obviously that could go sideways and cause some chaos. So there's a lot of things that could happen. But when you look at the markets, typically the path of least resistance is the recent history. And we're very clearly back in an uptrend, right? We're above all the major moving averages, other than maybe the 20-day. I would have to check on that, but for sure above the 50-day, the 100-day, 150, 200, et cetera, et cetera. And that would mean that the preponderance of evidence suggests that the next move is up. Bitcoin also was up nice in the week. We were up to about 64,000. 64,000 US, about 86, 87 Canadian at the time of me making this video. Bitcoin was up about 6 or 7%. So when it comes to Bitcoin, I think that we're going to see a 1 or a 2 month period where it is up 50, 60, 70, 80, maybe even more. But I would say 40, 50% for sure in like a 1 or a 2 month period over the next 6 or 7, 8 months. And I think that probably happens before the end of the year, but who knows? Obviously, I could be wrong. But I do think Bitcoin is going to go up very significantly over the next 1 to 2 years. And historically, that has happened. It hasn't happened quite as quick this time around, but I think that it's only a matter of time. And I think that interest rate cuts, if anything, are only going to make that better. So that's the news on Bitcoin. There was a handful of companies that released earnings this week, so I want to briefly get into that. Palo Alto Networks beat earnings and revenue. They were up quite significantly on that news, but they did sell off after that. But they did close up on the week. So this is a company that I definitely do like. I definitely would buy it if the price was right. It's just too expensive where it's at right now. I really do like it, though. Price to free cash flow of 37, a PE of 46. That's too expensive. So buy point, just off the top of my head, it probably has to come down like 20%. A PE, price of free cash flow, if it went below 30, that's when I would start to look into it. I probably wouldn't buy, I wouldn't be super eager to buy until it went below that 5-year average. So if you could get it for a 28 price to free cash flow, that's when I would start to be more seriously interested. Lowe's released this week. They did beat earnings, but they missed revenue. A decent company. I think they're okay. I'm not necessarily super eager to get into them, but I mean, obviously there would be a right price to get into them if we did find that right price. The next one on the list here is Analog Devices. This is a company that I used to have, but I do not have at the moment. So Analog Devices, they did beat earnings, they missed revenue, they were up a little bit on the week. Like I said, this is a solid company. I would buy it if the price was right, although again, I do think it's a little expensive where it's at right now. TJX, this is another one that I have on a watch list. I've never bought. I might buy if the price was right. They released good earnings. They beat earnings and revenue. They raised their guidance, and they were up quite significantly on that news. Looks like about 10%. So this is, again, a solid company. Have never bought. I definitely would buy if the price was right, though. I think it's a very solid company. Agilent Technologies, I do have a small position in this company. Actually, it's a decent size. It's about 4 or 5%. And I'm comfortable with that. I probably never would add to it because number one, I'm reinvesting dividends, so I probably never will have to add to it. Solid company. It's like a B plus in my books. It's not amazing, but I do think it's solid. They did beat earnings and revenue. They were actually basically flat on the week, so kind of interesting there. The next one is NDSN. This is another one that I'm dollar cost averaging right now. They did beat earnings and revenue. They were up on the week. This is a really solid company in my opinion. That is why, obviously, hence why I am currently dollar cost averaging it. If you look at its valuation, it is below its historical valuations, although it definitely is bordering on expensive where it's at right now. So I'm not necessarily saying that it's a good buy where it's at right now. I definitely would have to dig a little bit deeper. And I'm definitely going to have to, considering I do have a weekly buy amount on this. So I definitely will dig a little bit deeper on this one, and I may or may not cancel that weekly buy, depending on what I think fair value is. But it definitely is bordering on being overvalued. The last one is TD. This is Toronto Dominion Bank. They missed earnings, and they had a little bit of a scandal come out as well. So they were actually basically flat on that news, but they did sell off on that news, but they went right back up again. They basically ended the week flat. So that is earnings from this past week. Kind of interesting, not anything too crazy of note. Like I mentioned earlier, next week we do have NVIDIA, so that will drive the markets a little bit. And that is kind of the last of the notable earnings will be next week. So stay tuned for that. As far as the portfolio goes, this is the mock portfolio here. The one thing that I have been doing here that I've never really talked about, no new buys. Basically, everything is the same. I am selling off SPHY and USHY very slowly. Those both have made new yearly highs. Those have done very well for me because my average price is, it's 23.4. It's currently at 23.8. Obviously, that's almost just above break even. But you also have to keep in mind that they're paying like a 7.5% dividend. So that is why I have bought them on the anticipation of rate cuts. And I've sold off probably half my position so far. and I will continue to sell that off basically over the next probably 6 months or so. I'll probably sell off the whole thing, depending on how things look. If we start to get ahead of ourselves and inflation starts to tick up, I'll probably sell off quicker, because that probably means the Fed is going to start cutting slower or stop cutting. So that's kind of data dependent. But the one thing that I have been doing, I have been selling a lot of puts, as you can see here. But the one main thing that I have been doing lately is selling puts on BITO. Now, this is a Bitcoin futures ETF. This is not a spot ETF. And the reason that there's a handful of reasons that I'm selling on this one. Number one, I anticipate the price of Bitcoin to go up. So obviously, hence why I'm selling puts, because I think that that's easy money. And number two, the spot ETFs don't have options, at least yet. And number three, this company pays, I don't think it's technically a dividend. I think it's technically a distribution that is well into the double digits, at least where we stand right now. So this is one of those plays that I think over the next year or so, maybe year or two, is going to be an absolute steal. I think this is a play. Again, obviously there's risk, quite a bit of risk involved in it, given it's related to Bitcoin. But if the price of Bitcoin goes up, even if it's not that significant, but as long as it goes up, I think this is going to be a trade where I think you can double your money over the next year, and I think you can do it relatively easily. I think you could triple or quadruple your money on this, especially if you're using options. So that is the one big move that I have been doing over the last week or so, the last 2 or 3 weeks. I've been kind of hesitant to talk about it because I think that there's a lot of risk involved, but this is the one big move that I have done. And I've collected probably in this account, probably like $30,000 in premiums, maybe even more. Hence why my cash position is up to $315,000. So I'm not up as much as the market is on this portfolio, but you also have to keep in mind I'm only up about 11-12%. The S&P is up, I think, about 16 or 17. But you also have to keep in mind that I still have $315,000 in cash just waiting on the sidelines. If anything happens, I'm ready to buy. And that has been my strategy for the last 6 months or so, that when we get those major dips, like we did, whatever that was, 2 weeks ago roughly, that's when I'm going to be ready, and that's when I will outperform the market, because I will be right ready to go with that cash, ready to go. And on top of that, I am selling calls on the companies that I already own, collecting premium, and I'm selling puts on the companies that I want to get into, collecting premium. Basically, the strategy behind that is, I think that the majority of the companies in the market right now are overvalued. So there's two ways of playing that. Number one, you can just wait until they come down, or number two, the better way of doing it, because you can make money while you do it, is to sell puts. Basically what you're doing there, for the people that don't know, is let's say you have a company that's at $100 and you think that it's overvalued at $100 and you think it's worth $90. Well, you can sell a put option at 90 or 85, or depending on how liquid it is, you could do it at like 89 or 88 or whatever. And in return for selling that option, you collect a premium. So you make some money doing it. The only downside, people say, well, what's the catch? The downside is, let's say the stock goes down to $80, you still have to pay $90 to buy it. So that's the catch. That's where you could potentially lose out. But the downside is extremely limited insofar as you're going to get it for less than what it's currently at, and you're going to collect premium doing it. So in my opinion, and I think most people would agree, the risk reward is very, very good when you're selling puts. You just have to keep in mind that you want to make sure that the price that you're selling at is a good price. Because if you take Nvidia at $127 or whatever it's at, and you sell a 125 put, in my opinion, that's way overvalued still, even though it's below where it's currently at. People will be tempted to do that because you can collect a lot of premium to do that. But you don't want to do that because Nvidia at 125 is still overvalued. In my opinion, it's worth like $60 a share. You want to be well below $100, preferably closer to the 60 where I think it's roughly worth. And that is the key. You won't collect as much premium, but the long-term results will be better because you won't get destroyed by price volatility. So that is basically what I am doing in the near future. So like I mentioned off the start, if you like the video, you get value, please like, comment, subscribe, and stay tuned for more.